Hi there, Adam Gower here, welcoming you to the real estate crowdfunding show, Syndication in the Digital Age at GowerCrowd.com, where today you are going to hear from Max Sharkansky, managing partner at Trion Properties. Trion is the foremost company on the West Coast specializing in buying and improving apartment buildings. Max is also one of the only sponsors in the real estate community anywhere, as far as I can tell, who have so far established a leading-edge digital marketing program to raise capital online. I've known Max for over 10 years. He and I met after I'd been brought into East West Bank to assist them with their non-performing real estate collateralized commercial loan portfolio. What stood out about Max then, as it does now, was his immediate adaptation to market changes. At the time when most real estate developers were still scratching their heads and wondering what was happening right there at the beginning of the Great Recession around 2008, 2009, Max had immediately recognized a massive buying opportunity had emerged and had changed his investment strategy accordingly. Today, Max runs Trion Properties, and all you need to do to find out how effectively he has adapted to the new world of being able to raise capital online is check out Trion's website and all their social channels by going to the show notes page for today's episode at GowerCrowd.com, where you'll find easy access to all of those links. Here's some of the things that you're going to hear from Max today. How to grow your equity pipeline through crowdfunding, why going the extra mile pays off with your online strategy, how to build a trusting relationship with investors online, and a lot more. You can find the video highlights of my conversation with Max today at GowerCrowd.com, of course, but take a look at my YouTube channel also, will you? Just go to YouTube and search for GowerCrowd. Of course, if you would, please hit the bright red subscribe button right away, and then check out the series of short videos I put together there with some of the highlights from today's podcast. All right, thanks for doing that at YouTube. And now I am pleased to introduce the top real estate developer on the West Coast, industry thought leader and managing principal at Trion Properties, Max Sharkansky. Max, thanks so much for doing the podcast with me. I'm really grateful to you. It's good to see you this early Monday morning.
My pleasure. Good to see you too.
Barely caffeinated. Why don't you kick off and let me know something about your background, who you are, and what you do over there at Trion Properties, and then let's talk about your digital marketing strategy.
My name is Max Sharkansky. I am a managing partner and co-founder of Trion Properties. Prior to being on the investment side of the business, I was a broker at Marcus & Millichap. In 2005, my partner and I bought our first couple properties. We continued buying into 2006, and at the end of 2006, we left and opened up our own shop. We have been doing value-add multifamily ever since. We had a quick stint in 9, 10, 11, 12 during the downturn, buying non-performing debt secured by multifamily, which is how you and I met.
Right.
Asset manager. And today we continue to buy value-add multis. We do a little bit of ground-up development. We do about 5 to 7 deals a year on average. I would say that's been pretty consistent year over year. Our one area of growth has been average deal size. So we continue to grow our average deal size. We used to do onesies, twosies, 3 million, 5 million, and now we're kind of in the 25 to $60 million range as a sweet spot. So that's it.
All right. So let's talk about how you raise money, right? So let's start with the old way, right? Kind of when you first started in 2005, what was the process? First, you get debt from a bank and then you need equity. So how did you do that then?
Debt is never the hard part. Debt's always the easy part, especially when you're buying apartment buildings. It's probably the most financeable asset class in America. It actually spoils you a little bit when you try to get financing on something else. You're like, wait, why is this so difficult? So equity, we did very organically. My partner and I, Mitch and I, we bought our first couple properties with our own money. That runs out very quickly. Then we started to syndicate and just do very typical pass the hat type syndications.
What's a pass the hat syndication? What does that mean, actually?
You're passing the hat to every single human being in your phone book, every single human being in your office. I was talking to guys at Marcus, and of course, all those guys love to invest. Mitch is an HFF alum, and all of his colleagues were investing, and we would pull the capital together, friends, family, and buy properties.
So how did you do that? What was the actual process? When you say pass the hat, you didn't literally, hey, I've got a hat.
No.
You didn't literally, say, but you throw your money in there, right? So describe that process to me.
Sure. We drafted a PPM, or our lawyer drafted a PPM with a business plan in it, of course. And we would call everybody, we would tell them about the deal. And that's how we would raise the money. They would print out the PPM. They would print out the PPM. They would sign the subdocs. They would sign the operating agreement. They would scan it and email it back to us.
Okay. And how did you pitch, though? I mean, you didn't just send them the PPM. You had to explain you've got an apartment somewhere. So what was the process for doing that?
It's really not that much different than it is now in terms of the pitch, because people, if someone's going to write a large check, and even if they're going to write a check for the bare minimum, which is $50,000, that's a fair amount of money. So they're going to want a 5-minute phone call, 10-minute phone call. And we set up the call or the meeting. Oftentimes they'd ask to meet on site. That we don't have that as much anymore, especially now that we're doing out-of-state deals. Back then it was more local. So I should mention that we did grow geographically as well, because we used to just do deals in our own backyard. So I was a broker of apartment buildings in the San Fernando Valley. So naturally we started buying apartment buildings in the San Fernando Valley.
And did you put together like a deal memo with pictures and the storyline, or was it just the PPM, just a legal contract that you used, or did you use?
We did both. We did a memo. We did like a deal brief or a memo, whatever you want to call it, and a PPM. And in that sense, that really hasn't changed. The only real difference is how we market it, how the manner in which we send it out to our investors, and how they sign the documents.
All right, so let's talk about that. Yes. So okay, so when you talk about signing the documents, you're talking about now a technical component of the process, right? Instead of sending a PDF and having it emailed back, etc. But what I'm interested in is the workflow from what it, when you were first raising money. Presumably you called somebody and then you said, here, I mean, you said a 5-minute phone call, but presumably you had to send them the deal brief, or you'd meet with them, right? And you'd hand it over and talk about it. Or presumably they already knew you, right? So, okay, so they already knew you before you actually pitched to them. So there was an element of familiarity with you. It was an existing relationship. They knew who you were. They knew you could do it, right? That you were able to deliver. So how did you migrate to the online world? Tell me what that process was like.
Well, the online world found me. I didn't find them. Well, I shouldn't say that. So I found them in terms of crowdfunding. The first deal we ever crowdfunded was on GowerCrowd. Great group. They did really well for us, and then we did a few deals with them. Then we just, started to talk to some other groups: CrowdStreet, Realty Mogul, Realty Shares, which is now defunct. And we did crowdfunding on all of those sites. And then we got a call from CrowdStreet saying they were rolling out the software product, and that this was going to be the next big thing in how to raise money. And it's just not about like reaching out to new investors, or not just about reaching out to investors, but also managing our current investor base, not just on the fundraising aspect of it, but after close as well. So you're sending out your quarterly reports, you're sending out your financial statements, your K1s, and everything is being done through this investor portal. And it's also acting as kind of like a Dropbox or a box where you're storing all of your files there also. So the investors aren't constantly emailing us now where they're saying, hey, I misplaced my K1 or the quarterly report. I mean, we do still get those, but if they're correctly using their portal, it's all in there. So that's the software product, and we have been using CrowdStreet, their software product, almost since inception.
Now, when you first moved to the online world with RealCrowd, what was your skepticism to actually taking your deals online? Did you have, or what was the resistance if you had any, and what were the surprises that you had when you first went online to try and presumably solicit from investors you'd never met before?
You've known me for a long time. I have a pretty high tolerance of risk. So the scary thing wasn't that, because the way I looked at it is it's like a publicly traded company, right? Tim Cook doesn't know who's trading Apple stock every day. So if I'm not familiar with my investor, I think that's okay. I mean, we took referrals all the time. And that's, the old school way of syndicating, right? You start with people that you know, and then as you make people money, word travels very fast, and they refer to their friends and family to you. So I was already doing deals with people we didn't know. You're not going to have a personal relationship with every single one of your investors. And we were right about that, because now we've got almost 400 active investors, and I don't know most of them. I haven't spoken to them. Someone in my office has, but a lot of these people just came via the internet. So that was something we were comfortable with correctly. The only thing that really gave us pause was we had to pay a posting fee to RealCrowd, and we weren't sure if they were going to be able to raise the capital, because that model is based on a posting and you have to take your risk, whereas the other LLC model, which was Realty Mogul and Realty Shares, that's the broker-dealer model. They get paid based on success, right? So that's a different business model. They raise you a certain amount of money, you pay them a fee, and there's less risk. The other component of the risk is execution risk. We're going to need a certain amount of money at closing. Is the money going to be there when we're ready to close? So we had some money, we had some liquidity that we were able to tap in the event that it wasn't there. So that was fine.
And was there any difference between the way that you felt you were pitching, if you like, your deal when you went online with RealCrowd versus the way you'd been doing it with friends and family before? Like, was there a shift in any way?
I think the shift was more so with the investor than with us, because the pitch ultimately is the same, right? And I think the risk is with the investor, because they're just going on the internet. They're going on a website that's brand new. There's no credibility really, because these are all new companies. The entire industry is in its infancy, and they're finding these people who are collecting millions of dollars
Right.
to go buy real estate. So what we did, I would say the one change that we did is we went the extra mile to make the investors as comfortable as possible. So I would invite them into our office so they could see that we have a real company and we're not some fly-by-night group that's working out of a garage. I would meet them on site. I would show them the story, and I would get them as comfortable as possible to invest with us.
And how is that process evolving now? Because, it's a few years since you did that. I know that you're working on some pretty intensive online strategies. So how is your process of communicating and establishing that relationship of trust with investors? How is that evolving?
Well, the industry of crowdfunding and raising capital on the internet is no longer in its infancy. So now you've got credibility, now you've got trust, you've got track record. So if we're going to put one of our properties on a platform, all of those groups that I mentioned can say we have already raised money for Trion successfully multiple times, and they've hit their IRRs, and these guys are for real. So that's a very powerful statement to be able to make to raise money online with complete strangers.
Right, but you don't rely just on the word of RealCrowd or Realty Mogul or CrowdStreet for your reputation. You're building your own reputation as well. How are you doing that online?
Well, our investors are, and any prospective online investor creates an account. They go into our investor portal. They look through our fund documents. Usually that's probably the first deal they click on. And in there is a track record. They could see all the deals that we have in portfolio. They could see all the deals we've closed, not just in our track record, but also in the offerings page. They usually set a phone call. So they call our office. We have a phone call for a few minutes. If they're looking at a specific deal, then we'll go through the rent comps and sale comps and all of the supporting analytics. And I think, that usually does a pretty good job of it.
So now somebody goes onto one of these websites, right? And they see your name, and sure, there's, an element of trust because it's on a reputable, what is becoming known as a reputable website, right? GowerCrowd or CrowdStreet, etc. But what's the first thing that they do, right? They're going to go on Google, they're going to run your name, and they're going to run Trion properties, right? And so they're going to do research on you. So how are you managing that aspect of the digital world when somebody, a brand new investor, high net worth individual, is looking you up?
Some of the other things we do to establish credibility for ourselves as a sponsor, first of all, we do a lot of PR. So we're always in Globe Street and National Real Estate Investor, and you could see our deals and our thought leadership pieces. We're always giving interviews and things of that nature. And then we also create our own content. So we really do as good a job as possible of educating investors out there. So you can go to our website, which we're now reworking, and you can read our education pieces talking about what to look for in a deal, what to look for in a sponsor, what to look for in the marketplace. We talk about macroeconomy, microeconomy, and some of our markets, and just the way we see the world from both the shoes of a sponsor and the shoes of an investor.
Right. So it's highly educational, isn't it? You use multiple media as well. What kind of media have you been using?
We use YouTube. We use blog posts. We are on LinkedIn and social media. So we really use everything.
And what have you found to be the biggest challenges of kind of moving this process of establishing a relationship? Look, when we first started chatting, right, the assumption was when you were raising money from the guys at Marcus, et cetera, at HFF, or from friends and family, they knew you, right? They already knew you. They had a relationship with you. So now you're developing relationship with people that don't know you online. So what does that process look like? I mean, how do you think of that process as being similar or different from knowing somebody for years and years and years of having worked together with them or being actually related to them?
Well, again, we try to just establish an online presence and an online personality, and we try to give the investors as much value as possible. And this goes back to education and video, and we show our properties online. We show a lot of before and after. And that's the best way we feel for us to establish online credibility.
And was that something that the real estate websites, the crowdfunding websites have encouraged you to do, or is this something that you've taken on of your own initiative?
A little bit of both. Some of these ideas came to us via the crowdfunding industry, and through our own initiative, we decided to start doing it ourselves.
And so by doing it yourself, are you finding that the crowdfunding websites are consistently delivering full finance for specific deals, or as they get bigger, it gets harder to fill your own equity needs, that you need to go beyond them for marketing or for online work? Or just to kind of explain how those two things interact?
Sure. So our own internet marketing to grow our database of investors is really a constant evolution, and it's just something that's evergreen, and we're always trying to acquire more investors and ideally get them into our fund. When we're crowdfunding for a deal, the crowdfunding company usually tells us how much they feel they can raise, and that's the amount of allocation we'll carve out for them. So if we're buying a $30 million property with a $10 million equity check, and they say, Max, we think based on the metrics, based on the location, the asset class, we can raise you $3.5 million. So I'll carve out $3.5 million for them. and the other 6.5 we'll take out to our investors, or we'll just fill it with our fund and maybe 1 or 2 investors.
And have you found an uptick in the success of raising capital through the platforms or otherwise as a result of your independent online activities?
Well, it's hard for me to quantify how our independent online activities affect our raises on the platforms, but it absolutely has driven an increase in folks that come to our site directly and call us and email us.
That's interesting. Okay. So why is it hard to quantify on the impact on crowdfunding website raises? Because it would seem to me that, I mean, my assumption is that if you've got a really good online presence and you list your property on one of the crowdfunding websites, you're going to have a better chance of raising the money than if you don't have a good online presence. Would you agree?
Yeah, but if we give them a certain allocation and they raise it, I have no idea whether or not they would have raised it otherwise, or I don't know how our internet marketing impacted that raise.
I see. And to what extent do you seek guidance, is the wrong word. To what extent do you find inspiration from the real estate crowdfunding websites for your own online efforts, your own independent efforts, in terms of what they're doing and how they solicit investors?
You know, we'll occasionally get ideas. We're on a lot of their newsletters. So we'll occasionally get ideas for topics for education, and then we'll just create our own content based on those topics. Sometimes there could be a hot topic for the moment, like, you know, interest rates right now or have tanked. So there's a lot of talk about that, and you can create some content around that.
I see. And these are things that your investors are interested in learning about as well, right? Obviously, right? So what have been the biggest challenges to you of working online, like on a day-to-day basis? Does it suck up too much of your time, or are you satisfied that it's equivalent to what you were spending in terms of time before you went online?
Well, of course, it's much more time consuming, but we've got somebody, Andrew Lucas, who works with us in investor relations and capital markets. So he's able to manage all of the incoming calls and emails and correspondence. Interesting.
What I meant actually was in terms of production of your blog posts or video, or even doing calls like this, for example. In terms of establishing the relationship with investors, I mean, obviously it's a good thing if the biggest issue you have to deal with is the amount of positive inquiries that are coming in, right? As a result of it, people wanting to get involved in your deals. But in terms of the underlying foundation, do you find time consuming more than you would like, or about what you would like, or less?
I think it's about what we expected. And, you know, of course we're all busy, but if something is highly productive and highly accretive and there's a good return on our time investment, then we do it.
And you're finding that your efforts to establish relationship online fit that mold, obviously.
Correct.
All right. I'll tell you what, let me, because I know you're busy this morning, let me roll to 3 final sign-off questions, if that's all right.
Great.
And these are giveaway questions I ask of all my guests. And these will go into some kind of video or something I'll put out later. So first question, what's the most, for somebody in your shoes, right, a sponsor out there, somebody thinking about starting syndicating real estate online, what's the most important thing they should keep in mind if they've never done it before and they're just thinking about starting?
Going back to what our concern was in our first deal, make sure you're able to close the deal if the crowdfunding platform is a little bit short on their carved out allocation. So unless you have a guarantee, so you give somebody $2-3 million in allocation, if they guarantee they will be there to close, that's one story. But if you have execution risk, have that liquidity available somehow, some way, or make sure you can complete your raise after close if, you know, you're raising for capital expenditure dollars or something of the sort. but execution risk is definitely something to keep in mind.
Second question. This doesn't necessarily just pertain to your online efforts at Trion, right, to establish relationships with new investors or even with current investors, but in general, what has been the hardest lesson that you have learned online?
What has been the hardest lesson that we have learned online?
Or you personally even?
I think the hardest lesson that we've learned online is the trial and error portion of doing our own internet marketing with Google AdWords and Facebook. You're going to spend a lot of money up front before you start to see results because you have to understand the trial and error. And there's going to be a lot of error before you start to see success. So I would say don't give up if after the first 2, 3, 4, 5 months, you're not seeing a lot of results. Do some split testing, figure out what's somewhat working, and continue to nurture those marketing pieces that are giving you success.
Fabulous, thank you. And then the final question, personally, what are your key daily habits that keep you successful or that make you successful online?
I think that our correspondence and our level of engagement with our investors is what makes us successful online. I've had multiple investors tell us that no other sponsors are as engaged as we are and as transparent as we are. So transparency is another thing. Like, we give people as much information as possible to get them comfortable in investing with us.
And you do that via email and on all social channels, don't you?
Absolutely.
Yeah.
Phone call. If it's possible to meet them, we meet them. We'll do investor events at our properties where we get investors to meet us at a property. We show them around. We'll do some before and after. So we'll walk them through a vacant unit that hasn't been rehabbed, and then we'll walk them through a rehabbed unit. We'll show them space that has been converted that was just dead space into amenity space. It's worked great in the Bay Area because we have a lot of investors coming out of the Bay Area. So we've done some events at our property at Fremont and some other properties. So it works. It works.
And that's the perfect thing to take a videographer to next time, isn't it?
That's right. That's right. That's right.
So you can show everyone all the time. Lovely. Max, a pleasure as always. Thanks so much for your time this morning.
Great to see you. Have a great day.
That was Max Sharkansky, managing partner at Trion Properties. You will be really impressed by the visibility Trion has online and the sheer volume of high-value content that they put out to educate investors to help them make well-reasoned investment decisions. All you need to do is check out Trion's website and all their social channels by going to the show notes page for today's episode at GowerCrowd.com, where you'll find easy access to all of those links. Also, if you'd like to build a digital marketing system so you can raise capital online, just like the one that Trion has implemented, I've put together an advanced whiteboard workshop so you can build the exact same system yourself. Just go to GowerCrowd.com, and on the podcast page, you'll find a link so you can take the training on demand. All right, that's it for today. Thanks so very much for listening. And thank you, Max Sharkansky, managing partner at Trion Properties, for being my guest. That's all for this episode. I'll see you next time. And for now, this is Dr. Adam Gower signing off.